are good to go, guys. So, welcome to the DeLorean link up today, guys. Again, we have an amazing educator here for us. We have the amazing Patrick Kenney. Now, guys, if you've never ever heard of this gentleman, okay, he is a young gentleman. He's the age of 25 years old, and he is absolutely killing it in this trading game, okay? Years of experience, the things that I have learned from this gentleman, okay? Age is it's nothing but a number, all right? Because the things that I've learned from this gentleman, I can't even, I've had to just make sure that I'm putting all that knowledge, putting all that knowledge into action. The things that he told me, when he speaks, I feel like he's speaking directly to me, okay? If you've been on his Go Live sessions, you already know that this man is full of knowledge, full of wisdom. He knows exactly what he's doing in these charts, and he is out here to help all of us to win in these charts, okay? He is the creator of one of my favorite strategies, DeLorean. Where's the DeLorean Nation at? Come on, guys, drop some flavors in the chat. I know my DeLorean Nation is here. And as you guys always know, every single Sunday, 6 p.m., I am usually here teaching you guys the basics of DeLorean. But today, we are going to have Mr. Patrick Kenney, who is going to come on here. So, guys, I need some fire. I need some sevens. I need everything. I need all the energy in this chat today. Because I don't want to bring Patrick on. We need to give him the biggest welcome he deserves, okay? Because I don't want to bring Patrick on and I'm not seeing no energy and no fire in the chat, guys. So I really need you guys to really blow it up for this gentleman. I am so happy and privileged to be introducing him onto my call, Mr. Patrick Kenney. Let me find him. I'm going to unmute him. Let me get the rest of the people up in this call. I'm going to find him. Patrick, if you could wave your hand for me so I can see you. Amazing. Let's go. Oh my gosh, guys, you don't understand. You guys don't understand how excited I am for this. So, guys, let's go. Let's do this. Patrick, can you hear me? Okay, let's see if you can hear me. Just ask him to unmute, and let's see if we can hear him.
There we go. What's up?
Oh, we've got it. Amazing. Great stuff.
How are you guys?
Oh, thank you so much for doing this for us. I don't think you understand, how special this is. It's such a blessing to be able to have you here, a part of the team. We're here in the UK, we know that you're out there in the US. So thank you for taking the time to just come on here. And I'm going to hand it over to you. I'm going to throw you host and just thank you so much. Thank you so much, Patrick. Really appreciate it. Over to you.
Well, thank you. I appreciate it so much, and you're welcome. I'm super excited to be here, guys. I want to do a couple different things with you today, a little bit different. I think that when I wrote a mission statement out for 2021, my mission was to not only, of course, talk about trading a lot, but help people understand their finances better. Specifically, for me, I'm younger, so I have, a lot of people that look up to me from ages 18 to 30 that are trying to figure out what they want to do with their financial future. And, really today's call is hopefully to provoke you to think about your future. I talked about it on Thursday, and something that I mentioned on Thursday was be selfish enough to think about your future. We're taught in life all around the world to not be selfish. We're taught to not take for granted things. We're taught to just think about others first and all this sort of stuff. And I totally get it and understand it. But my question for you guys is, have you ever been in a situation where you're selfish for yourself? I'll give you an example. How many of you guys have a job right now? Some sort of job. I don't care what it is. How many of you guys have a job? By the way, if you don't have a webcam, I don't know where it is. Where's your webcams? How many of you guys have jobs? Wave your hands. How many have jobs? Everybody has jobs. And you get paid what? Weekly, every 2 weeks, every month? When do you get paid? Type it in the chat. Let me know kind of when you guys get paid. Monthly. Okay, so monthly is the thing overseas, I guess. All right, a little different than the US. Perfect. Monthly. Whether it's monthly, weekly, yearly, I don't care when it is. When you get that money, I want you to really think right now, what do you do with it? So that maybe it's a check, maybe it's a direct deposit. I don't know, maybe it's cash. I don't know what it is, but what do you do with it? And the reason I bring that up is a lot of people, they do this. They get their money and then they say, okay, self, I've got rent or my house to pay. I've got cell phone. I've got insurance. I've got all this stuff. And they start paying that and they have a little bit left over. And then with that, they go, okay, what can I do now? And they, I don't know, go out to dinner. They go watch a sports game. Obviously, I'm talking about mostly outside of the COVID era. They go do fun things. They go somewhere. They go someplace. I want to rewire your thinking today to being selfish. And what I mean by that is by paying yourselves first. How many of you guys have ever paid yourself first? What I mean by paying yourself first is before paying your bills. All your bills, before paying any bills, you need to start putting away a little bit of money first. Pay yourself first. Be selfish. Do you deserve it? Yes or no? You just worked for it. What are you going to do? Go put it on all your bills? Do you deserve the money? Well, yeah, I hope. So whether it's 5%, 10%, or maybe you make enough where you actually have a lot of excess, maybe it's 20%. I don't know what the number is for you, but you need to come up with a game plan, even if it's 5% of your check, to separate. And that's called paying yourself first. And start building a little nest egg. And it might be very small, tiny. But as you go and as you grow as a human being and as you age, as time goes on, that will start to compound. And then suddenly you are able to start to invest into your future. By a show of yeses or nos in the chat, how many of you guys have something put away for retirement? Do you want to retire? Let us know in the chat. Yes or no? You don't have to say yes if you need to say no. Let us know. Okay, a lot of you guys are doing great. Some are yeses, some are nos. The reason I say be selfish is that in order to retire, you have to be selfish because you have to think so much about yourself that you're putting away money for the next 30 or 40 years. I'm 25 years old. I have more money put away at 25 than the average 65-year-old. I'm thinking about my future. I'm thinking about how am I going to be done one day? Because God knows I don't want to trade for the rest of my life. I don't want to have to deal with support. I don't have to deal with clients. I don't want to even have to deal with real estate for the rest of my life. I want to simply relax at some point in life. I'm sure you all do as well. So before we begin today, I encourage you to think about yourself this week, this month, this year, this decade, yourself. Putting yourself first. Everybody type be selfish in the chat. I want you to start being selfish with your finances. Thinking of you first. I understand you need to think about your kids, your family, your bills. I get it. Even if it is 5%, take it off the top first. And the reason I say this one last time is that if you don't do that and you wait till after you pay your bills, it's going to be real enticing to take that money and go and get a nice dinner instead of putting it away. We all know that. That steak or that pasta or that shrimp, whatever it is going to sound a lot better on a Friday night than when you're 65 trying to retire. Put it away first. So with that said, I'm going to share my screen. Hopefully you guys see it. Let me know in the chat when you do. I'm not sure if you do you? There you are. Perfect. So like, she just mentioned, if you don't know me, guys, I'm 25. I've been trading for 7 years. I can't even believe that. So I got introduced to trading when I was 18. I'm 25 now. And I've been able to basically leverage trading into other businesses that are a whole lot of fun. And I've been able to have a lot of great experiences. And through it all, I've been able to create a trading software that's helped a lot of people. And if it's your first time meeting me, I'm no better than anybody. I'm no smarter, guaranteed that. I just really got entrenched and intrigued by the financial markets. And ever since I was young and my dad retired at 47, he taught me and instilled in me, work hard when you're young and you have the energy, because by the time you're in your 40s and 50s, you're not going to want to work anymore. And I really took heart to that and started to learn a lot from him. And I give a lot to my parents, teaching me how to manage finance as well and how to do things in a good way. And hopefully today, whether you take anything out of this or not, you just take it from me that, thinking about yourself and investing in your future is the best investment that you can make. So on this note, on these pictures, I just want to mention, I don't know why I always do this. I just think it's kind of cool. In the top left corner there, I took a selfie with a turtle in the US in Hawaii. The reason I bring that up is that was the last picture that I have of myself before I knew what the foreign exchange was. So that was the last time that I took a picture. That person that you see right there did not know what Forex was. I just want you to think about it for a second. And the reason I say that is a lot of people look at people that make sense of the market and understand the market, and they think, well, they just get it. That person didn't know what Forex was. Every single one of you at some point in life, maybe it's right now, didn't know what Forex was. You thought Forex was a company. You thought Forex was an opportunity or something of that nature. My goal for you today is to teach you guys a little bit about how to manage your risk, how to take some trades, and then we'll go from there. So with that said, guys, let's jump right in. First of all, I want to talk about the risk with DeLorean, and I want to first share a student's information. So this is a student. I blocked out some of their personal stuff. But this is a person that, as you can see, took 22 trades. 8 of them won, 12 of them lost, and 2 of them broke even. So if 8 win and 12 lose, do you guys think that this person would make any money? They're losing more than they're winning. No, wouldn't think they'd make any money. Yet look on the right side at their percentage growth. They've made money. The moment I understood this concept right here, that I can lose more than I win and still make money, everything changed. So yes, I've been trading for 7 years, but I've only been doing these principles for 5. For the first 2 years, I really lacked consistency. I'd make money, I'd lose money. I'd make money, I'd lose money. I'm not sure how many of you guys have been there. And the reason is because of this. I didn't understand how to manage a portfolio. It wasn't my strategy at all. This person lost more than they won, yet they still made money. Let's see what that looks like. How many of you guys have lost a trade before in the chat? That red block represents that loss. I hope you have. You've all watched me do it. I've lost a trade. Yeah. When you lose a trade, it sucks, but whatever. It's part of trading. You lose trades. There's not a single trader in the world ever in history that hasn't lost a position. You're going to lose. So if you're going to lose, and we know that you're going to lose, what do you do in order to mitigate that risk? Well, let's look at this. You lose a trade. Let's say you lose another one. How are you feeling after you lose 2 trades in a row? Maybe you pause for the day. Maybe it's on a Monday. You're like, you know what? Maybe it's a little early in the Monday. All right, let's take a deep breath. Maybe I'll come back tomorrow. Then you come back tomorrow. You're fresh. You're ready. You're excited. Oh, let's keep this going. There we go again. Another loss. And then maybe you're like, you know what? I'm only going to lose 2 a day max. And you do it again. And yeah, you're disappointed. I mean, people go through this ebbs and flows of the market. And they lose again. I mean, how are you feeling after 5 losses? Anybody want to share how they'd feel? I'd be down in the dumps too. Just what it is. You're wondering if even the strategy that you're using is working. You're wondering if maybe I'm not seeing something correctly. You're wondering if maybe I'm not doing something correctly. Oh my gosh, you lose 6 in a row? Forget about it. But let me show you something. You see the size of these blocks? Those represent your losses. What if wins? double your losses. You win. What happened? Another win. What happened? 3 wins, 6 losses? Wait, I'm break even? 4 wins, 6 losses? I made money? This is a visual representation of that first slide I showed you, that portfolio. That was a student of ours. They lost more than they won, and they still made money. You see that, guys? The red blocks represent losses. The green blocks represent wins. As long as our wins are double our losses, we should be all right. The problem is most students, their wins are larger than their losses. So they'll be risking 1% for reward of 0.5%, or they'll be risking 2% for reward of 1%, or they'll risk 2% for reward of 2%. The goal, write this down in your notebook. There's 3 pillars to success in your portfolio. This is for any market, crypto, Forex, stocks, doesn't matter. Number 1, you must maintain minimum a 1 to 2 risk to reward ratio. What does that mean? For every 1% you're risking, your reward is 2. That's number 1. That's your first pillar. There's 3. Your second pillar is you must risk max 2% per trade, but every trade must be the same percentage. So you pick from 0 to 2%. What are you going to risk each trade? Most students select 2%. What I mean by it must be the same is every trade is 2% risk. That way you don't weight one trade better than the other. Some students will say, well, I believe this one's going to win big time, so they risk 4%. It's not the case. It's 2% every single time. That's your second pillar. Your third pillar is big. A lot of people forget this. Account exposure, maximum 10%. What does that mean? Well, exposure means what is the maximum amount that I can lose if all the trades I currently have open lose? Your max exposure is 10%. So if you're risking 2% per trade, how many trades are you allowed to have open at any given time? 5. Maybe you're going to say, I'm a more conservative trader, Patrick. I only risk 1%. Cool. So you can have 10 trades open at any given time. Your max exposure on your account, though, is 10%. Now, I realize that fund managers go by the 16% rule. I realize that. I'm a more conservative investor and trader. I've always been that way. Even though I'm young, I'm not aggressive. 10% max exposure, no more at all. Can it be less? Sure. I'm not encouraging you to go find 5 trades either. I'm saying if there is amazing trades all over the board, you're only going to take 5. So with that said, let's jump into the DeLorean. Give me a yes or a no. You've seen DeLorean or you haven't. Yes, you've seen DeLorean. No, you haven't. Let's see in the chat real quick. Okay, we've got a lot of yeses, some nos. Perfect. So let's run through this. DeLorean and hyperdrive will be a couple things I want to talk about today. Number 1, I want you to recognize, for those of you guys that know what DeLorean is hyperdrive is just the same as DeLorean. It's just on a lower time frame. Okay? It's just on a lower time frame. It's scanning the 5-minute time frame for super fast scalping. It's no different. So let's jump through this, guys. Do not overcomplicate this, first of all. So let's compare hyperdrive to DeLorean. Keep in mind, it's the same algorithm on different time frames, okay? DeLorean is going to take 70 trades a day, approximately going to give you 70 trades a day, whereas hyperdrive, on good days, can give as much as 500 trade alerts. All right? Now, trades are sent on DeLorean every 15 minutes because the lowest time frame that it scans on is the 15-minute time frame. But on hyperdrive, trades are sent every 5 minutes. Now understand, in a little bit, I'm going to teach all about this, but keep in mind the 3-candle rule for a lot of you guys that you know of. Okay, on hyperdrive, that's 15 minutes or less, meaning profits start to come within 15 minutes or less. Now, all this is just generalities, but the most important part is down here. The best times to trade DeLorean, 2 to 10 a.m. Eastern Standard Time. 2 to 10 a.m. Eastern. The best time to trade hyperdrive is 9 p.m. Eastern to the next day, 2 p.m. Eastern. 17 hours a day as compared to 8. And then right down here, there's your notebook worthy moment. The pairs you should focus on hyperdrive at any given time. These are all Eastern, so please convert them to your own time zone. Okay? So with that said, before we get into this, I want to give homage to good old Tyrone with his statement, paid to wait. If you are brand new to investing and trading, I want to give you one chance at this. Paid to wait just simply means patience. You have to be willing to wait for a trade setup that you want to happen. The problem that people have is they are eager to find a trade setup. So they go look for a setup and they force a setup. The market will never go anywhere. What is the rush for? There is none. Okay? So what is DeLorean? For those that don't know, well, this is what it looks like. It's a simple interface. On the right side is your alert panel. This is telling you what and where to buy and sell in the market in different currencies. Okay? Every single one of these are clickable, meaning I can click on any of these pairs and it'll pop up on the chart, and the chart's already set up for us with all these pretty colorful lines that we'll use in a bit. The best part about it is we only use arrows, which we'll talk about in a while. So it's very simple to understand. And finally, the icing on the cake is the fact that it's a web-based software, nothing to download. So with that said, everybody in the chat say buy. If you see a blue arrow, you are looking, I see you guys lipping buy. I see you on the webcams, there we go. If it's a blue arrow, you're looking to buy, nothing else. Who's ready? Sell. Okay, if it's a red arrow, you're looking to sell. Now, let me explain for a minute, what does that mean for you newer traders? Buying means you're simply buying something at, say, $100, and say the value goes up to $110, or 110 euros, or 110 pounds, whatever. It goes up. How much did you make? 10, whatever, you name it, whatever currency. I know we're all from international call here. Okay, what does sell mean? Well, sell doesn't mean like exit. Sell means you're actually shorting the market, which means you make money when the market does what? Goes up or down? You make money when the market goes down, just as the arrow tells you, because the arrow's facing down. So buy arrow up, we make money when the market goes up. Sell arrow, we make money when the market goes down. And it's a simple button that we have to click when we enter a trade, buy or sell. Now, with that said, we follow a simple 4-step process. BCLS, if you've never heard of this, it's important. It stands for bigger, cut, location, and space. Now, we all went through earlier how to manage a portfolio. Now we're going to start getting into, do I take the trade or not? We all now learned that we can technically lose more than we win and still make money. It's all about our risk percentage, our risk to reward ratio, our account exposure, how we're balancing our portfolio. But now we're going to talk about, do we enter the position or not? And this is completely up to you, but you can learn a simple 4-step system, and then you're going to know whether you're going to or not. So as a quick note, before we begin, we're going to focus on the 2 candles to the left of the arrow. I'm ready to hit the charts. Are you? All right, so if we look at this, first of all, if you're brand new to trading, how do you feel right now? A little overwhelmed? There's a lot going on. Market's going up, market's coming down, market's coming back up, and the market's coming down. Where is it going from right here? Anybody know? Flip a coin, right? I don't know. That's the reality of the market. So what I was trying to do when I built this software, by the way, was not for IM. I built this for myself just to help me as I was in college. So I kept missing setups. I was going to work and I was in class and I kept missing setups. And I was like, is there a way to get a text message to my cell phone when the setup happens? Nobody knew. And then I found a guy that was able to do it. Now we have DeLorean. So what do? I said we focus on the two candles to the what? To the left of the arrow. So let's zoom in. Are we looking to buy or sell? Based off of the arrow. Yeah, we're looking to sell. Okay. So if we're looking to sell, we're looking to the two candles to the left of the arrow. So let's all take just a step back and identify what a candle is. Okay. Every little colorful chunky thing are candles. Those are the two to the left of the arrow. Those are what we're going to focus on. Now, how I take trading out of it to understand what a candle is and the components of a candle is think about a candle that you have in your, maybe you have a candle in your home. It smells good, got some wax. Think about the colorful part as the wax, and think about those little thin lines on top and bottom as the wick, what you light with the flame. So we're going to focus on predominantly the wax, the candle bodies, those chunky, colorful things. So let's go into our 4-step process and let's read this really quick and see what we can find. Let's go to step number 1. Can you guys read that real quick? It says, look at the two candles to the left of the arrow. Is the red candle bigger than the blue? So we're going to look at the two candles to the left of the arrow. Is the red candle bigger than the blue? Yes or no? And then we just answer the question, yes or no. Let me know in the chat. So when we look at the top of the two candles, notice how they're at the same level. They're parallel with each other. If you look at the bottom of the two candles, what do you notice? The red one is lower than the blue one. Okay, so we know they're at the same level here. Red's lower here. The red's bigger than the blue. So we get a yes. If we get a yes, we move on to step number 2. Step 2 says, does the red line cut through both candle bodies? Now, what did I say a body was? The wax or the wick? The wax. So answer me that question. Does the red line cut through both candle bodies? The wax. Yes or no? Yeah, it cuts through the wax. That's good. So we got a step 1, yes. Step 2, yes. Again, if you get a single no, you stop and move on to the next setup. But we've gotten 2 yeses, so let's keep it moving. Step number 3 says, is the gray, aqua, or blue line closely above the two candles? Now, I want to also help you out with this really quick by also saying, or, write this down in your notebook for step number 3 if you haven't already. Some of you have, or cutting through. Is the gray, aqua, or blue line closely above the two candles or cutting through? That's the question you want to ask yourself on step 3. So I'll reiterate it in a sec. You ready? Is the gray, is the aqua, or is the blue closely above the two candles or cutting through them? Yes or no? Okay, getting some yeses. What color are we talking about here? Why do you guys say yes? What color makes it a yes? Yeah, the aqua. Okay. We're going to go into some more detail in a minute and proximity and where closely above and all that sort of stuff means. But for now, are we cutting through? If we're cutting through, a little bit easier. We don't have to even worry about proximity. Good job. Yes. The last step is actually pretty simple. It's not a is the or does the, it's a did you make sure? It's a reassurance point. A little bit less of a question, more of a reassurance point. Did you make sure the gray, aqua, or blue lines are not closely below? Now in this case on step 4, we're talking about not the two candles to the left of the arrow anymore. We're talking about the red arrow. Did you make sure the gray, aqua, or blue lines are not closely below the red arrow? Did you make sure? Yes or no? Let us know in the chat. Okay, we've got a gray one way down yonder. So that begs a question. Well, what do you define as closely? Anybody think that in their head? So now what we're going to do is we're going to talk about the anatomy of a position inside of the DeLorean. So we all learned a little bit ago that when we get a red arrow, we're looking to sell. Remember that? And you make money when you're selling by going what direction? Up or down? Down. So we make money by this going where? This way. And this way. So the first component, there's three components of a trade. And every trade requires these three components. Okay? Number one is an entry price, where you're actually entering your position. Number two is what we call the SL. This stands for stop loss. Okay? That's when things are going bad. The market's going against us. And number three is a take profit, aka a TP. That's when the market's doing good. So if we know we have three components, let's discuss how to find each component. First and foremost, the entry component is comprised of a couple different things, and we'll reiterate this in a little bit. But right now, from a basic level standpoint, where do you believe the entry component would be at? At the arrow. So we know at the open of that candle, aka the top of the red candle there, is our entry level. That's the open of the candle. That is where we sell, we short the market. We make money when it goes down. So let's check that off our list. That's our first component. Now, before we actually enter a position, we must know in our heads where a stop loss is going to be and also where a take profit is going to be. Why would we need that? Anybody remember why we would need that? It's going to help us determine our risk to reward ratio. It's going to help us determine our risk analysis in terms of our percentage. So where does our stop loss go? Well, our stop loss is actually really easy. Remember we pounded the point of two candles to the left of the arrow? Let's go back to those two to the left of the arrow. And let's find everything. The wax and the wick. The body of the candle and the wick. And you simply put your stop loss above the two of them. So we have these two, and we put our stop loss above the two of them, and we're taking into account this long wick. So this is our stop loss. So what does that mean for this area here that I'm kind of lining up? What is that called? Well, this is our risk area, right? That's how much we're risking. Now, what's the third component of a trade? We just got our stop loss done. Check that off. The third component is the take profit, the good part of a trade. And keep in mind, when you put these values into a brokerage, it doesn't matter if you're asleep, at lunch, doing whatever, your brokerage will automatically take you out of these positions at these levels. They're helping you on the bad and the good. So where does our take profit go? Well, what we want to ask ourselves is, remember going back to step number 4, did you make sure the gray, aqua, or blue lines are not closely below? Remember that? What color is below our arrow? What major color? We have the gray, aqua, or blue as the major colors. What color is it below the arrow? The gray. Well, the gray is where we're actually targeting on a position. So if we know our gray is down here, then what I like to do, if I'm selling, this is important, little nugget for you. If I'm selling, I like to put my take profit a little bit above the gray line, because it's a lagging indicator. See how it's coming up? I can simply anticipate that this line is going to continue higher. So I want to allow for that to happen and give myself a little bit of a buffer zone. So this green line represents my what? My TP. So now I've gotten my third component. I got my entry. I got my stop. I got my target. Okay. All I'm then doing is making sure that I have minimum a what? Risk to reward ratio. A 1 to 2. Yep. A 1 to 2. I'm making sure I have a 1 to 2 risk to reward ratio. Without that, success is going to be dime a dozen. It's going to be difficult doing a 1 to 1. It's very hard. Not easy. You're going to want to only find trades that are like this. How are we feeling so far, guys? Now, the next thing I want to bring up for you is a helping hint on step number 3. Step number 3, it said, is the gray, aqua, or blue lines closely above or cutting through? Do you remember that? So I'm going to erase some of this so we can reiterate some of this. I'm going to keep the take profit because there's nothing fancy with the take profit. With the stop loss, there's actually a really cool little trick that I use to determine if step 3 is a yes. Step number 3 says, is the gray, aqua, or blue lines closely above or cutting through? Now, the reason I bring this up is, where was my stop loss? Anybody remember? It was above the 2 candle bodies, right? That was my stop loss. Now, if the market were to go bad, aka go against me, what direction would the market go? Up or down? Yeah, the market would go up. So I want you to get in the habit on step number 3. Let's take a step back. You guys are going to need a notebook out. This is the biggest nugget I can drop. Ask yourself this question. Is the gray, aqua, or blue line my friend or my enemy? Now, how do you know that? Well, let's look at the aqua line. If the market were to go against us, you just all answered the question, it would go what direction? Up. That's bad. Let's say the market goes up. Oh, wait, it did. It goes up. The question you're going to ask yourself is, if the market goes against me, is it going to hit the gray, aqua, or blue first, or stop loss first? What's the answer? Would it hit the gray, aqua, or blue first, or stop loss first? Right there, the aqua. I don't know why you guys are saying gray. Not gray. Check your eyes. Aqua first, right? This is aqua. This is gray. If it were to go up, so does that make the aqua my friend, protecting me from hitting my stop loss, or my enemy? It's my friend. Step number 3, that's the only question. If you understand this concept, and this is all being recorded, by the way, if you understand this concept, that's the question you're asking yourself. Is it my friend or is it my enemy? That's it. In this case, it's a friend. And also notice, did the market go up to the aqua? Yup. What did the aqua do? Did it act as a level of resistance or what? Yep. It helped us. Last thing I'll tell you is that the aqua acts as the magnet. The market loves to pull back to it. So the reason that we do this is that, let's pretend for a minute that the aqua line was way up here. Ignore the real one. Pretend that was the aqua line. The aqua acts as what? A magnet. The price loves to pull back to it. So it's got a higher likelihood of pulling back. If the aqua was there, would it be my friend or my enemy? It'd be my enemy because my aqua is above my stop loss. It's not going to do me any good, is it? All right, let's keep this train rolling. Let's do another example. Let's look at this really quick. I'm going to go a little bit faster now. Are we looking to buy or sell? Good job, Patrick. Good job, Kyle. Good job, Dander. Good job, Sam. Okay, we're looking to buy. Nothing crazy yet. Just a blue arrow. Now, step number one, I'm just going to talk to you out loud with this. By the way, on DeLorean, if you need these cheat sheets, so always have them or print them out. All you got to do is come up to training and you can print those PDFs out for the steps. Okay. So step number one says it's different now because we're now buying, not selling. Is the blue candle bigger than the red? Okay, we're looking at the two candles to the left of the arrow. So look at the two candles to the left of the arrow. Is the blue candle bigger than the red? Yes or no? Sure it is. So we go to step number two. Does the red line cut through both candle bodies? Yes, it does. Yes, it does. Step number three. I want you to pretend you never learned the step verbiage and ask yourself one question. Is the gray, the aqua, or the blue my friend or my enemy? Write down friend or enemy. Yeah, it's my friend. How do I know that? Well, we already see the shaded region. There's my stop loss. If the market were to pull back here, what would it hit first? Aqua or stop loss? Aqua. It's my friend. And step number four, this is the advanced step now that this is the only thing we have to worry about. Did I make sure the gray, aqua, or blue lines are not closely above price? What do you guys think on that one? Yes or no? But Patrick, none of them are above price. I don't see any of them. How do I answer that? If you don't see any above you, guess what? You're trading with the trend now. You're with the highest probability DeLorean trades. So if you get to step number four and you say to yourself, ready? Is the gray, aqua, or blue line above? Did I make sure? And you don't see any? The trend is up. You're now trading with the trend. Guess what you target? Well, let's take a little bit of a zoom out. Zooming out. Check it out. Where do you think I targeted? If none of them are above you, or in the other example, if none of them were below you, even though the gray one was below us in the other example, we then target the previous high of the picture, previous structure. Notice how the market, think about the market in simple terms. Think about it as like sports. There's buyers on one team, there's sellers on another. When the market goes up, are there more buyers or sellers? There are more buyers. No, the blue line just represents current price. The blue line isn't anything. I like your thinking though. Yeah, there's more buyers. And then what happened right here? Are there more buyers or sellers now? Sellers came into play. So this acts as a level of what we like to call resistance, where sellers don't like the price to get any higher. They take over. So I don't know what's going to happen up here. This is like a bunch of question marks. Sorry, but I have no idea. I don't know if buyers have the poise and control to overtake the sellers up here. So I'm not going to try to target up there. I'm only going to target what I know. And what I know is this. Sellers don't like the buyers taking control any higher on this level. History tends to repeat itself. that is where I'm going to put my target. Does it look like we have a minimum of a 1-to-2 risk to reward ratio here? What do you think? Well, you could simply calculate it, right? 1.76441 is our entry. 1.76262 is our stop. Get rid of the last number, circle the next three. What is 644 minus 626? What is 644 minus 626? Okay. Now ask yourself, all right, if it's 18, what does my minimum reward have to be? Well, our minimum is always what? 1 to 2. 18 times 2. So let's check. Our target is right here. The green number. Get rid of the last number, circle the next three. What is 689 minus 644? What is 689 minus 644? 45. Do we meet a minimum of a 1-to-2 risk to reward ratio? Yes or no? Yes, we can take that trade. Good work. All right, guys, so let's get into some more advanced concepts. Again, how are we feeling so far? You guys liking this? Another advanced concept is called the 3COL, 3-candle rule. Not very advanced, but I like to call it advanced. You should be in profit in 3 candles or less. If not, you pull out. So what does that mean? Let's pretend the arrow is here. Okay, that's our entry. As you know it so far. I'm going to teach you one more entry technique in a bit. The question is, after 3 candles and the candle closed, mix it down here, am I in profit? Yes or no? If the answer is yes, you stay in the position. Simple as that. If the answer is no, it's limboing between your entry and your stop loss. You're negative, but you haven't gotten stopped out. Your stop loss has not been hit. That is what is considered a 3-candle rule. If you are not in profit, you pull out. So what does that look like? Well, it's all different on time frames. All it is your time frame multiplied by 3. So this is all multiplied by 3. So if you're on the 5-minute time frame, that means if you're not in profit in 15 minutes, you pull out. Say you're on a higher time frame, you're on the 4-hour. Yes, that means if you're not in profit in 12 hours, you pull out. Whatever it is in between, obviously the most popular times to trade DeLorean, this is kind of the money zone in here, between 45 minutes and 3 hours. Again, if you're not in profit, you pull out. Well, what, Patrick, what if I was negative 1 pip? Are you in profit? No? Okay, then you pull out. But what if I was only up 4 pips? Are you in profit? Well, yes. You stay in. This is simple. Again, don't overcomplicate. 3-candle rule or less is what that is called. Now, what I want to do is just introduce one more concept, and I hope that I'm making this design in a way where you guys are starting to understand this information. But the last concept that I said I was going to kind of dig a little deeper in was the entry. Remember how I said earlier that your entry price was at the start of that candle? Do you remember that a while ago when we talked about that? 80% of the time, the market will pull back a little bit before it actually goes your direction. So for me, there's one colored line that I have not yet mentioned to any of you guys. Anybody know what color it is? The yellow. So what do? Well, if I'm selling, I wait for the market to pull back to the yellow line, then I enter. If I'm buying, I wait for the market to drop down to the yellow line, then I buy. So instead of entering here or entering here, I am now doing that on a pullback. What does that do to your risk to reward ratio? Increase it or decrease it? It increases it. Why would it increase it? Well, if my stop loss is here, I originally entered here, say that was a 7 pip stop loss. Now it turned into a 5 pip stop loss. And if you had a 7 pip stop loss and say a 14 pip reward, you're at a 1 to 2. But now if you have a 5 pip stop loss and a 14 pip reward, you're almost to a 1 to 3. Yet you didn't change anything. You just waited for 3 minutes for the market to pull back a little bit. That is how we utilize the yellow line to our advantage, especially since the market likes to pull back. Okay? So again, if I were to go back to this example one last time, do you guys notice how the market pulls back? When the market pulls back, wait for the market to pull back. Instead of right when the market opens. Okay? That will increase your risk to reward ratio. It does not increase your probability of winning, by the way. Doesn't change the probability of winning, doesn't change your accuracy. All it does is increase your risk to reward ratio, which by default, what does that do for your portfolio? Increases your chances of actually making money. The higher you keep your risk to reward ratio average, the higher probability you will have at making money. And the last thing that I will say is this. If you are entering positions like this, you put your stop, you enter here, and you put your target here, and you're letting the market just barely get into profit, and then you're taking your entire position out, say here, just because you set it at a 1 to 2 risk to reward ratio and then exited early, you're not doing yourself any help. What a lot of people will do is they say, well, Patrick, I always have a 1 to 2 risk to reward ratio. Yet they're exiting every single profitable trade early to lock in profits because there's this fallacy out there, and it's a quote that a lot of traders like to use. And they say, you can't go broke taking profit. That is the furthest away from true that I've ever seen. Because imagine, once again, that I enter a trade here with my stop loss here, and I put my take profit down here. But what do? I exit right here because I can't go broke taking profit. Well, what I just did was essentially have a 1 to 1 risk to reward ratio. Now I can go broke taking profit. Have the mindset that you already did your due diligence. You know what the trade is going to do. And you also are okay if it loses because you understand that your destiny is not defined by one singular trade. Your destiny is defined by months and years of culmination of trades inside of a portfolio. So with that said, I'm going to hand it right back. I hope that this was valuable to you guys today. Thank you so much for having me, and have a great rest of your Sunday evening, guys. God bless.
Oh my goodness, Patrick, thank you so much. Like, honestly, I really appreciate everything that you've done. I really appreciate this session. Guys, can we just throw it back to Patrick, please? Can we throw it back to Patrick? Can we drop some flames, drop some fire? Can we drop something in the chat? Because if you were not taking notes, guys, I don't know what you were doing. I honestly do not know what you were doing. Like, listening to him talk about the 4 steps, like, for me, I even had to just, sit here and just take my notes, because I was thinking to myself, this is just gems. Like, if you did not take all these gems and take these notes, like, I really have no clue what you're doing. Like, I'm honestly absolutely speechless, because I'm so grateful for everything that you've done today, Patrick. Guys, please blow up the chat. Keep blowing up the chat for PK. This has been amazing. This has been absolutely mind-blowing. I know you guys have taken some notes from this. If you're already a part of DeLorean Nation, I know that even if you've heard this information 1,000 times, you are happy to hear it again, because you already know the repetition that you get from this as well is what is going to keep you going. All right, this is what's going to keep you going, and you're going to keep remembering it the more you hear it. Okay, so don't think because you've heard it once that you don't need to hear it again. Okay, so thank you so much, Patrick. Thank you for blessing us. Thank you for giving us those gems. Thank you for making things a little bit clearer for some of us, guys. Like, honestly, I am so grateful. The power of manifestation is real. If you guys don't follow me on Instagram, please tag me on your IG, tara.that.it. Amazing to see you all on this call. We've had over 130 people on this call receiving value today. So if you receive some value from this call, I want you to drop some fire. Keep dropping your fire. Keep dropping your emojis, because, guys, I am so grateful for every single one of you that attended. If you are new to trading, if you've never ever heard of trading, and this is the first time you've been on this call, first of all, welcome. And second of all, I need you to get back to that person that put you on this call. And I need you to tell them, listen, I need to get onto this DeLorean strategy. I need to catch Patrick. And you can catch Patrick 4 times a week, 4 times a week here in the Go Live, in the I Am Space, in the Wealthier World. You can catch Patrick 4 times a week on Go Live. All right. So you get to trade live with him, and you get to actually make profit with Patrick live on a call. And not only make profit, you also get to learn how to become independent in these markets. All right, guys. So please, I hope you guys enjoyed this. This was amazing. I am so happy. You can see I'm smiling. I'm even losing my voice. I had to mute myself and shout and scream a bit. So please, guys, thank you so much for joining this session. Thank you so much for being here. Thank you so much for being so supportive. And I will see you guys next week, 6 o'clock, as we do DeLorean trading here with me. And I will see you guys very soon. Have a wonderful rest of your Sunday. God bless you all. Thank you. And I will see you guys next Sunday. Take care.